What's going on, everyone? It is Paul, the 920 Trader with 920 Trading and Trading Dakota. Today is Wednesday, March 27, 2024, and this is how we trade a spot today. But before we get there, if you like our videos, please go ahead and give us a like and a subscribe. Don't forget to turn on your notifications so you can be notified when we drop new content, which is just about every day and sometimes on the weekends. Also, don't forget to leave us a comment. We always appreciate those comments. And please share with your friends and neighbors. So without further ado, let's see how this thing shook out today. We're looking at pre-market high up here at about 521.86. It kept on running in pre-market, folks. It just kept on running and running. Finally made that pre-market high right before we opened up this morning, folks. We've got a pre-market low at 520.30. So right out of the gate, I'm thinking, okay, we've got a little over $1.56. That's better than it's been the last couple of days. But again, folks, think about those last couple of days. Horrible price action for the vast majority of the day until we got into the last 45 minutes, last 30, 45 minutes of the trading day. And then it went absolutely bananas. The question is it going to do it again today? Don't forget this, folks. We need three things. We need volume. Okay, got to have volume. We got to have volatility, and we need range. Now, the only thing we can really determine in pre-market is range. Again, so I'm looking at $1.56. So $1.56, that gives us plenty of range in which to work throughout the trading day, folks. So without further ado, what are we going to do? We're going to get into that open. Well, you can see exactly what happened. I did not take this fresh cross to the downside only because we were unable to clear this area. This was going to be a 5-minute double top in pre-market, folks. We were not able to take that. Now, what I did do was, because we were not able to push back up, and I'm giving everything away right here, folks. I did take this play right at VWAP. I said, you know what? I don't have a whole lot of risk in this play. We got a little bit of momentum, and we do. Look down here, folks. We got some volume back to the downside. So again, number one, we have volatility. We have volume. We're breaching a couple levels. Took a little flyer on this, and what did it do? It dropped right out of the sky, folks. A beautiful. I consider this kind of a fortunate play back to the downside. Right at VWAP, and said, you know what? We have the volume, we have the volatility to back it up. So let's see if we can ride this puppy as far down as it'll take us. I had this right down here as a target, folks. So I had this 519.81, 519.81, which gives us, we got about a buck and a half out of this first initial move back to the downside, which if you get $1.50 during the trading day, you're doing really well, folks, depending on where you are in the options chain. But if you look at it from a 920 crossover standpoint, we got this cross. I jumped the cross, obviously, by a couple of minutes. But again, right at VWAP, and I think POC was right around here at the same time. So we're probably talking about something like a death cross to the downside, again, on this candle at 952. So trusted the 9, got through this first level, got through this second level, and just trusted it down. Again, I was trying to take it to this 519.81. We struggled a little bit, took it off the table. I wanted that second bite of the apple, so we rejected at this level right here. Took it back down. We were able to get to this level this time, which was a very, it's a good play. So the first play out of the gate was a very nice play. Second play out of the gate, decent. For all intents and purposes, what are we talking about? We're talking about 19 down to 7. We're talking about a 30-cent move, 40-cent move. Folks, those are really good moves. You can pick up a 30 or 40-cent move. And again, it depends on where you are in the options chain. Those are always really nice moves, particularly early in the morning. Going 2 for 2 early in the morning is always a nice thing. Cross to the upside, but we didn't get anything confirmed in here. Remember, if you're going to counter trend trade, number one, you want to take quick scalps on counter trend trades. We're pushing down, folks. We're pushing down. So again, if you're going to take plays off of your 30-minute levels, take those up to your next level, but again, make those quick scalps. So if you're following the trend, just follow the trend. If you're counter trend trading, make sure you take quick scalps. Do not try to go super long on plays on counter trend trades unless the market gives you confirmation that we have a reversal. So anyway, did not take this double cross to the downside. A little bit too big of two candles to take this. What are we talking about? We're talking about 91 through 38. So we got quite a bit of space in these two candles. And I said, nope, don't want to take that back to the downside. It'd been a pretty good morning at that point, and we got into kind of this situation, almost the same type of situation that we were in yesterday, where again, today was 100 times better than yesterday, particularly if you caught this play back to the downside. But we just kind of muddled around for a little bit. Now, our muddling today was much, much better than our muddling yesterday. And one of the folks in the group mentioned, hey, we're getting an awful lot of crosses in here. What do we do? And I said, just be patient, wait for your setup. Make sure you take a play directly out of a major zone. Okay, so it's going to be a 30-minute double top, a 30-minute double bottom. It can be a 15-minute double top. It can be a 15-minute double bottom, or a series of 5-minute double tops or double bottoms that are created throughout the trading day. So you want those to be major levels. We don't want to take positions halfway through the trade where you're kind of in the middle of two different zones. You can, but it becomes much more difficult to predefine your risk the further you are away from a major zone. So again, trust your major zones. Now, will you have to jump the moving averages? Yeah, sometimes you have to jump the moving averages, again, if you're coming out of a 30-minute zone. But the closer you are to your specific predefined risk, the better you will do as a trader. Anyway, that's my TED Talk for right now, folks. And again, so it just kind of bounced around. At this point, we're a couple hours into the trading day. Now, I will tell you this, folks. I missed this trade right in here. I went to lunch. Early today, only because I didn't have breakfast. Today. This, again, coming out, look at this demand zone down here again, 519.63. We tested it multiple times, finally got this double cross, actually almost a triple cross. Triple cross is 920, and a cross of the moving averages all on the same candle. Anyway, triple cross, very, very little risk in this play. Could you have taken any of these? Absolutely. Again, out of major zones. But you got this cross right here. Again, super, super high probability play. Or low risk. I should say low risk. What is your risk on this? Okay, so let's say you closed at 519.71. You have 8 cents worth of risk. Now, what you probably want to do on a play like this is you want to use a swing low. So these candles in here, if it breaches this back to the downside, you have to get out of the trade. So even at that, you've got 54. You've got 17 cents worth of risk. Okay, that's it. That is a very, very low risk move when we're talking about options, folks. But again, predefine your risk, and your best plays are going to come directly out of those major zones. So again, this play would have been a really, really nice play back to the upside, up to VWAP. We're talking about 519.70. Let's see, you caught the entire play. Talking about a 60 cent, 70 cent move, somewhere right around there. And again, folks, that is a really, really nice play, and it didn't take long to get there. Now, we have the ability after the fact to look at it and go, you know what, that would have been a good trade, or that would have been a good trade, or that would have been a good trade, because we can see it after everything has played out. But what we have to do as traders, if our edge presents itself, we are compelled to put on the trade, folks. If you get a cross through a major level and you say, if I take a play, or if my edge is I want to cross to the upside directly above a 30-minute zone, put on the play. You know what's going to happen? You might take a loss. And taking losses are absolutely acceptable in trading. We have to take losses, and we have to be okay to take losses, folks. Remember, we are not reliant on a single trade or two trades or three trades to make it as a trader, but rather a series of trades over time. That one trade, whether it's a loss, whether it's a 500% trade, it doesn't matter, folks. We're going to stack them up some point in the future, okay? Now, we use those single trades to develop our edge, okay, and develop our probabilities. But over time, we're not interested in that trade that you had 3 months ago that was a 600% trade. It doesn't matter, folks. Now, it factors into those probabilities, but just because you did it once, folks, it doesn't matter. It just absolutely, you can hang your hat on it. Oh, I remember that time I had a 600% trade or a 2,000% trade or whatever. But ultimately, folks, it doesn't matter. That's one trade. One trade should not make you, and one trade should not break you as a trader. So again, if your edge presents itself, you are compelled to put on the trade. well, why aren't you taking trades? Well, I had a pretty good day so far. And again, I missed this. I missed this stuff in here. Could have played any of these back to the upside. But again, I missed these in here. And I certainly missed this. And folks, remember, we can look at it after the fact and go, well, I would have done that, or I would have done that, or I would have done that. Well, unless you're in the arena, folks, no, you probably wouldn't have. I was getting back to lunch about this time, folks, and again, missed this play to the downside. This was a really, really nice play to the downside. We are in an otherwise downtrending market on the day, folks. Why I didn't take this trade? I can tell you exactly why I didn't take this trade. My grandkids are in town right now from Virginia, and they were in my office, and they were actually getting on the mic a little bit. And so I had them running around my office quite a bit today, and I was like, folks, kids, I'm missing trades, but that's okay. I don't get to see them far often enough, so I'll miss out on some trades. I'm perfectly okay with that. Nice trades to the upside. Take this breach back to the downside, double cross. I kind of thought we were going to get a little bit higher push out of this. I was looking at this 520.66, but alas, it did not do it. But anyway, you had trades in here to the upside, trades in here to the downside. You could have been bounced around just a little bit, taking a loser out of this trade right here, or not been in this trade. But ultimately, after the fact, it doesn't matter. We have to be able to execute in real time. So we are going on throughout the day. And at this point, what do we got? A couple hours left in the trading day. Here we go, here we go, here we go. And this is the one right in here, folks. They were still in the office. I'm like, oh, no. And I told the folks, I said, okay, we've got this level up here. Now, if you put on this trade anywhere in here, so we got a double cross on this candle. We have a double cross on this next candle. If you get two in a row, folks, on a known level, put on the trade. Put on the trade. Number one, to predefine your risk. But again, we had some momentum back to the upside. I failed to take it back to the upside, but I said, you know what? I'm going to take this rascal back to the downside if we cannot get over this 520.96. Now, here's the crazy thing. My granddaughter, she was in here late in the day, and she's 4. She's 4 years old. And she was constantly saying, hi, my name is Lorelei, and I love you, and I like cake. So it was kind of a neat little deal. She probably did that 10 or 15 times. Matter of fact, one time she muted my mic without me knowing. So folks in the group are saying, hey, we can't hear you. And I looked down, and sure enough, my mic was muted. So anyway, caught this decent little play to the downside. Nothing big, but again, caught this one to the downside. Again, right in here, folks. A decent little play to the downside. Now you're thinking at this point. Now, I have volume profile on my chart, folks. Volume profile. Let me show you volume profile real quickly. This right here, and I'm giving it away right here, folks. This is volume profile. This yellow line is called the POC. This is called the POC. This is the point of control. This is the point at which most money has changed hands during the trading day. Now, this is the 30-minute, or this is a 15-minute chart that we're looking at right now. So based on more time periods, this yellow line represents where most of that money has traded hands during the trading day. So I am able to see on my volume profile where I have what's called heavy volume, these big blue shaded areas, and where we have what's called thin volume. I'm going to change to a 30-minute. Here's your 30-minute. There's your 30-minute. So I'm able to see these heavy volume areas. I'm also able to see these non-shaded or thin volume areas. Price tends to slow down in your heavy volume areas and speed up through your thin volume areas. So we can move faster through thin volume areas because there are fewer positions being defended. So what the big boys, the banks, the financial institutions, the hedge funds, what they're doing throughout the day is they're accumulating shares slowly as to not tip their hand. And then they realize where there are fewer positions being defended. So then they can throw a lot of volume at it. Look at this volume on the 30-minute candle. They can throw all this volume at it and take it wherever they want to take it. That's the beauty of volume profile. It shows your thin and heavy volume areas. Back to this 1 minute over here, folks. But I had thin volume over 57. 57 is where we had, we rejected this area multiple times, folks. We rejected. So we rejected over here, brought it back down, rejected here, brought it back down. But I said, folks, if we can get past this area, past 57, let's see if we can take this thing to the upside. Now, I took this play. There are multiple places to take this particular play. You could have caught a fishtail play right here. So fishtail is the space between the 9 and the 20. You could have caught once you breach a 20 to the upside. I said, you know what? I want to wait until we breach VWAP to the upside. Now at this point, I'm thinking, okay, I got about 17 cents, but I'm going to trust VWAP. So I caught it right here, ran up a little bit, turned around on me, made it red. Yeah, big deal. Again, single trades don't matter. I don't think we got up to that 57. We didn't get quite up to that 57. I said, if we can get to that 57 and start pushing through levels, we can really start moving because, again, we had thin volume up here, folks. Look at how this thing ran the rest of the day. Look at this thing go. It went and went and went. Now, the crazy thing is my granddaughter, Lorelai, I call her Frank. I said, Frank, is it going up or down? She says, it's going up, Poppy. And I had her point to a spot on the screen, and she pointed out this 521.86. So I said, okay, boy, I said, folks, Frank says it's going to 521.86. And this was before the run. And some people are like, okay, well, let's jump on board with Frank. Other people are like, no, we're still going down. I said, folks, if we can breach this level, we have all this thin volume. So once we were able to breach, we just kept on going. Now, as far as talking the group through this trade today, folks, I'm calling out different levels along the way, essentially saying, okay, we have this level. If we can breach this level, let's use this level as support. Now, if we can get up to that next level, let's see if we can push through that level and again, use that as support. We have this is actually a 4-bar play in here. So we have this green candle, a couple of green candles, a red, just kind of a liquidity grab, come down here and pick up some more buyers. This green candle right here at 1531, it pushed higher than these 3 candles. So again, that's a 4-bar play. Followed by, we breached this this next level to the upside. And what did we have? We had a 3-bar play up here. So I'm calling these levels and saying, folks, if we can breach these levels, and depending on where you got in and depending on where you are on the options chain, you are in really, really, really good shape. So the one cardinal sin of trading that destroys traders, folks, it's not the losing trades. The losing trades, those hurt. But if you're following your plan, no big deal. The things that hurt is you get into a winning trade and the market is saying yes, and you say, I've had enough. I'm fine. And that's fine. If you're scalping, if you have a specific number in mind, fine, take your trade off the table, be done for the day. But if you have the market, when it's saying yes, you have to listen. This is one of those trades that the market was saying, you know what? I think we're just going to keep on pushing up. Now, is it possible at any one of these levels it could have reversed? Absolutely. But folks, what do we do in here? What do we do, particularly late in the day? Let's see if we can ride the 9 wherever it will take us. Again, 9:20 trading. Cross over the 9, cross the 9 over the 20 to the upside. Use your 9 as support, and then take it to wherever it will take you. I was talking to one of our members after we closed today, and he was in deep. He had several handfuls of SPX trades or SPX contracts, and he bought those early in the day, and he was underwater on these contracts for a long time today, and he sold, and he made $400 on the trade. He said, had I just followed my trading plan, I would have made $16,000 on the trade before the market ever gave me a reason for getting out of the trade. I said, so in other words, you were able to hold that loser for 6 hours. You just were not willing to hold on to that winner a little bit longer to see where it could go. And he said, you're absolutely right. And he was distraught. I mean, this guy was absolutely distraught, not because of the money, but because of watching a winning trade take off without you. You're in the trade, you take it off the table, and it continues to run. And you can rationalize, you can say, well, you know what, I made my money for the day. But then you watch it go and watch it go. And you have that voice in the back of your head saying the market did not give you a reason to get out of the trade. Now, you hit a target here, you hit a target here, you hit a target here, you hit a target. You have all of these targets. But every now and again, a trade comes along, folks. A big, 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 big trade. If you're trading and you watch your P&L, your job as a trader is to not watch your P&L. Your job is as a trader is to follow your specific process, folks. It's like having a job. If your boss comes to you and says, this is the job that needs to be done, this is the process, this is how you are to execute to get to a specific result, you have to execute, folks. You must execute your plan, or else you are going to lose your job. It's the same thing with trading. If you don't execute your plan, guess what? You're going to fire yourself as a trader. But anyway, not to be a downer or anything like that, just trying to kind of pound it into people that, hey, it's a process. You must follow the process. And every now and again, you're going to get one of those trades that it just comes along and the market says yes, and you have to listen. Now, again, you have targets. If you're saying, okay, I'm going for this target or this target or this target, and I'm taking myself out of the trade, fine, be done with it. But at that point, the trade is over. You wait for your next setup. But don't feel bad about taking it off the table if you hit your target. And I'm not trying to talk out of both sides of my mouth, folks. Trust me, I'm not trying to do that at all. What I am saying is you can be the guy that shoots for targets, and targets are wonderful. They're absolutely. I have targets on my screen, folks. We can see those. But don't kick yourself in the tail if you followed your process and the trade kept going without you. I guess that's the point I'm trying to make. Don't look back, folks. Don't look back. You got in your trade. You followed your process, whatever it was from an execution standpoint that got you in. Follow that and follow your execution to get out of your trades. But that's how we did it today, folks. Overall, it was a wonderful day in the markets, a beautiful, beautiful reversal off the bottom. But that's how she played out today. Now, if you enjoy our videos, please consider giving us a like and a subscribe. And don't forget to turn on your notifications. That way you can be one of the first to be notified when we drop new content. Also, leave us a comment. We would greatly appreciate that. Share with your friends. We would appreciate that also. Now, if you are interested in live daily trading, so every single day from bell to bell, folks, every single day from bell to bell, head on over to our live trading Discord. It's called Trading Decoded. It is the best Discord in the world. No question about that. I'm very biased, but at the same time, if you've tried a bunch and you're like, I'm not interested in that, I don't like those guys or whatever, hey, come check us out. We're going to give you that first week for free, 100% access to everything in the community. It is yours to check out. If you like it, great, become a member. If you don't like it, no harm, no foul. Most people that test it out, guess what? They give it a shot, folks. They give it a shot and they join as members. But again, if you don't, hey, that's not a problem either. If you are interested in learning more about the 920 crossover strategy, head on over to 920trading.com. So all of the information about the 920 crossover strategy is there in black and white. You don't have to spend thousands of dollars on some super secret trading plan that may or may not work for you, folks. It's just not necessary. Everything you have ever needed to know about what we do is right there, folks. You don't need to spend thousands and thousands of dollars on it. But again, if you want that live trading experience, head on over to our live trading Discord. But that's how she played out today. That's how we did it. We appreciate you spending some of your most precious time with us today. We greatly appreciate it. We hope you all had a great day. We're going to do it again tomorrow, folks, and we will see you in the markets.